good morning to everybody. Thank you very much for joining us. Really looking forward to this session today. Um, Before I get into that, just a little bit of housekeeping. For those of you not familiar, we are recording this session, video recording it, and the recording will be will be available in the Callisto Grand members section on our website. You're all very welcome to join our membership. Please give us a shout if you're not a member at the moment. Um, as always with our sessions, we encourage interactivity. So please, if you have any comments, opinions, observations, disagreements, please use the chat or indeed put your hand up and join the conversation anywhere through the narrative today. Um, very excited about this session. Apart from the fact it's always a pleasure to work with Afia and Moody's. But this came about as a discussion with one of our members where we were discussing trends in fraud, and they were asking, basically, what are the trends in fraud within business? What's going on? What's happening? And as we were discussing, we were saying this would be an interesting subject for a much wider audience. And then I got in touch with Afia and talked about it, and here we are doing this. So for us, it's a great example of what the Callisto community can do for each other. So without any further ado, Afia, I'm going to hand it over to yourself now. So take it away.
All right, awesome. Thank you. Good morning, everyone. Thank you for taking the time to join. For those who may not know me, Ifje van Kaan, I'm based out of Brussels, Belgium. I work as the head of product strategy for corporate credit risk at Moody's. And I think this is 10 years now into Callisto, if I'm not mistaken, Mark. So maybe that's some
Yes,
sort of jubilee that we need to celebrate at
we've
the
partners.
conference.
Yes.
There we go. There we go. And so hope to meet you all at the conference in Budapest in October. So we're going to talk about fraud. It's a bit of a heavy subject. We'll try to make it a bit light. We're all amongst friends here, so please, if there's anything that you want to share, as Mark already said, you can put it in the chat, but you can also speak up at any given moment. I've prepared a couple of slides, but again, that shouldn't be it shouldn't be me talking all the time. I'm really keen to hear your thoughts, your remarks. If you don't agree with something, just feel free to speak up. And again, it's an ever-evolving subject. So yeah, a year from now, it would be good to maybe do some sort of follow-up just to see how everything has evolved and how companies are basically looking to kind of combat fraud. We're going to start off hopefully with something that is going to make this session interactive. And this is literally an image of a house. I don't know if anyone recognizes the house or if anyone can guess what this house has got to do with fraud. There are no bad answers. There are no stupid questions. There are only stupid remarks or stupid jokes, sorry. And I'll be making the stupid jokes, so don't worry. Anyone who wants to take a guess what's wrong or how this house is linked to fraud? Brett, go on. I see that you're thinking.
Is that you, please?
So no. So this is actually a house in Cheyenne, Wyoming. Why is it a special house? Because in this house, there are no less than 2,000 companies registered. As you can see, that's quite impressive for the small house that it is. It is literally one of those, what we would call postbox company, let's say, get-togethers. So this house was actually uncovered at some point during a shell company investigation. And if you were to go inside the houses, you can see that they kind of covered all the windows and the front door. There are literally like 2,000 little post boxes where someone is constantly, processing invoices and documents and whatnot. So this was quite an appealing thing. Then there is this delivery driver. Just for the sake of it, this is potentially AI generated, or this is a stock image. So nothing against this person in general, but anyone could think what a delivery driver has got to do with fraud, or potentially has got to do with fraud. Brad, go on. I see you thinking again.
It's the delivering to fake addresses or pretending it's being delivered.
Something like that, yeah. So we're working together with one of probably the biggest online retailers, not to mention the name, but the CEO got married recently and it was quite a thing. So essentially what is happening is that people are establishing companies and basically with every company that is working with delivery drivers, such as, for example, indeed the Amazons and the other companies similar to that. Essentially, what these companies are doing, they set up a company. It's a very recent company, so there isn't much information that you can find on them, but they need those delivery drivers. So essentially, you can go up there and fill your delivery truck with thousands of dollars worth of goods. And you can drive away and basically play Santa to your friends. And a month later, you can start another company and you can do the same thing. So there is very little check on those companies simply because for them, those thousands of dollars are very low in value, but nevertheless, this is making them lose millions and millions. One of the things that we're doing there is simply because there isn't a lot of information on those companies is we've developed a tool that allows you to check on the one hand, we have a database that has basically all the companies in the world. But then this is more on a personal level, right? Who is the ultimate beneficial owner of these companies? So we are then using AI to basically check stuff like LinkedIn, even up to the level of TikTok, Instagram, to understand how people are connected to each other. And then if we can detect when those people are establishing companies, if we can detect those networks of people that essentially are constantly, let's say, stealing those goods. So this is indeed something what we've seen as a trend. And up to your point, Brad, indeed, that basically they will use different addresses to the official delivery address. And then basically this is how you lose your goods. This is a business owner. I didn't put a name, but essentially these are 8 companies that all roll up into this one business owner. As you can see for the status, all those companies have now dissolved, most of them due to bankruptcy. One of the things that we see with fraud is people simply establishing a company. They will be active for 1 or 2 years. But then they will file for bankruptcy, and literally a year later, or even within the same year, they will open up another company. Just to highlight the importance of when you're looking at a company, it's not just about the company in itself, but it's also understanding, again, who is behind that company, what are other positions that this person may have in other companies, but also looking at previous positions to really uncover, what is this, what has this person been involved with? How well was he or she doing? This is another example. I used this one a year ago. Then it was quite a newly established company. But if we look on the right-hand side, so this is a company in Belgium. On the 16th of January of last year, basically they filed for bankruptcy. Literally a week later, a new company was established. But then again, if you look at the current role, so this is the existing company, he still has a position in another company, but looking again at the previous roles, all those companies have filed for bankruptcy. This was actually a special case because at first, when you would look at the report of this company, what he typically does is there is this law in Belgium that for the first 3 years, even if you have a limited liability company, you are still, let's say, unlimitedly liable for the first 3 years. Basically, you create a business plan that gets to be approved. And what this person did is he was working in a sector with a very high demand. So people were really keen to work with him. First 2 years, financials looked really amazing. He was doing a great job. The 3rd year, he doesn't publish financials, which is already a red flag. And then the beginning of the 4th year, he basically files for bankruptcy and then he starts over again. At some point last year, he still had 2 active companies where he did the same thing on a rolling basis. So again, highlighting the importance of we're doing business with someone. Who are we actually doing business with? Do we understand the full picture? I hear you think, well, that's all great if we have the time to look at each of those companies individually. I will show you later on how we can do this as well on a portfolio level. Mark, I see that you're unmuted. So is there anything you'd like to add?
No, well, I think you probably just answered what I was going to say, that one of the key things already that sort of jumps out from what you said so far is the absolute essential need to have a parent-child relationship across the whole portfolio, right? You know, the whole global portfolio. So because you're talking about sort of ultimate owners who, well, in these examples, they're setting up hundreds of accounts, and the common denominator is the owner, yeah.
Yeah, exactly. Exactly.
Okay.
And it's also, and this is really the trend that we see, like when people thought about fraud, because there are now so many things, right? We'll look in a second, like how do we define fraud? Because it's such a broad topic. But now with everything, with the phishing, the vishing, and all the new Gen AI perks that we can use, obviously that opens a entire new area for anything fraud related, and also to it at a much bigger scale. So again, which is why we need to look into how can we do this on a bigger picture and not just on a company by company. It's great if you can do this type of analysis. To be crystally honest, and this is why I keep using this example in my presentations, this was actually the guy who, the contractor who did our basement. And I of literally every, yes, Brad, it's okay to laugh with it. We had to take a quick decision because we were in full renovations. So this is one of those typical things. You need to take a quick decision. Information is available, but you don't have the time and you're doing a million things all at once. So I did check his financials. That looked really good, especially within the sector of construction. That is kind of a rare thing. But I completely failed to look at the underlying positions, which was literally like one click away. So yeah, just to shame myself continuously, I will use this example within my presentations. So it still happens, right? And that's the reason why fraud is so let's say popular, simply because yeah, with the speed that we need to take decisions and the overload of information that we sometimes have, it becomes very difficult to see if the situation is legitimate or not. And then this is a bit of a birthday celebration that we have today. So happy birthday to Hassan. I only put his first name. He's actually from Jakarta, and today is his 10th birthday. What is so special about that is because at the age of 10, Hassan is actually a business owner of several companies, which brings me, yes, Brad, thank you for the applause. Which brings me indeed again to the point about UBOs, etc. So what we indeed see is that people are establishing a bunch of companies. They will put anyone in, they will put children in, they will put elderly, they will put people that are deceased already. So again, if we want to look at that on a bigger scale, it's really important that we understand again who are doing business with, who is the ultimate beneficial owner. Because we have a couple of what may be funny examples, but it's obviously not funny if you are the person that is being, let's say, I'm not finding the word in English. If you're the person basically who's part of that fraud.
Victim.
The victim. Jesus Christ, thank you. So what are the key elements actually of fraud? So again, as I said, fraud is a very broad topic, but there needs to be some sort of, let's say, deception. So there is a false representation of a material fact. And there needs to be an intent as well. So the action is done knowingly, willingly, with really the purpose of misleading someone. With the result, of course, that to Brett's point, there is a victim in this, so they will cause harm or potential harm to another party. And obviously, when we think about fraud, especially within our world, this would involve like a financial loss or a personal loss or both. What is then, of course, the benefit of it? That, of course, perpetrator will gain something of value where normally they shouldn't be entitled to. So basically, those are the four elements. If we then look at what is basically the scale of the problem, this was a UK case study that we have done, I think 1 or 2 years ago. So approximately 41% of all crimes currently in the UK is basically related to fraud, with 39% of an estimation to be social engineering. So when we think about social engineering, think about the impersonating, etc. So the phishing, you get an email, you think it's from a payment entity, or you think it's from one of your customers or suppliers, and it basically guides you to the different websites. Or now the vishing, so with a V, where basically they use speech technology to, you think you get a phone call from your CFO, but it's basically someone else. And 70% of that also has an international component. And I think most of us are doing business on an international level. So this is making us basically, let's say, more vulnerable to that. What did we lose with that? So in the UK alone, we talk about 2.5 billion. So that is massive. And related to, or if we look into the previous years, we saw that there was a 17% increase. And this is the trend that we don't have the numbers yet for the remaining years, but we only see that this is going up and up and up. And again, obviously, the downside of all the things that we do with GenAI is that it's just so much more easier to do it at a bigger scale. 1.2 billion of that was basically stolen to what we call the APP, so the authorized push payment. So that is literally you accepting that you will do a payment simply because you think you're making a payment to someone else, which is the equivalent literally of about £2,300 every minute. So we're speaking for 17 minutes now. So do the counting of how much money at the moment there is lost in the UK because of these types of fraud or the authorized push payments. I'm going to stop here for a second just to see. I know that was already something written in the chat, but just if people have any remarks or questions at this time, it's also my moment to take a sip of coffee. But if anyone has anything they would like to share, to ask, just feel free to step in, right?
I think what we're seeing is an increased level of this, especially when you're talking about social engineering, and the fact that we've lost a lot of our social skills because we communicate digitally now. We tend to lose the ability to think. This just doesn't sound right, especially when you're talking about the V phishing. The voice doesn't sound right. We don't communicate with voice anymore. We don't take phone calls anymore. Everything's done by text and SMS and email. So we don't know how to ask questions in real time. And I think that's what a lot of them play on, the idea, if I could just get you to fix this up with a sense of urgency, the fraud goes through. That social engineering. So it'd be good to hear some more comment on that.
And I think, as I said in the comment there, that this is such a huge thing, say from the business perspective, and a lot of our audience here are from shared service centres, that it's absolutely essential that portfolios are looked at, across the whole region and not country by country, because as we've seen, the scope and scale of this fraud is just, I mean, the numbers you're talking about here are just mind-boggling. I was trying to work out 2,300 by 17 or 18 minutes. That's a lot. And from the point of view of Moody's, Afi, what are you seeing in terms of like client inquiries, companies coming to you? Is this an area that is a real hotspot now, rather than say just the traditional Moody's credit ratings, etc.? Is there a big spike in wanting information because of this, because of fraud aspects?
Yeah, 100%. And I think, like last year, we talked a lot about interconnected risks. And as you said, it's not working, we shouldn't be working in silos. So this is typically something that within Moody's, for example, this is more on our financial crime unit. Whereas we know that, and I'll touch on that in a couple of slides, this is not an isolated problem. If your, for example, legal department or whichever department is working with that, this is something when you work in credit that you need to know about. If this happens within your company, you are exposed to unlimited fines. But this is the same thing for your customers. If your customers all of a sudden are exposed to unlimited fines because of this, I'll talk about that in a minute with the failure to prevent. that just has an impact on creditworthiness. The same thing that if, for example, the example that we saw with that delivery driver, etc., those can cause massive losses. The same thing of doing business with an entity, like the stupid example that I gave of myself, doing business with that contractor. We got our basement in the end, but so many people paid to that person without ever getting any service in return. So we're losing so much money on that. In terms of for Moody's, again, what people want to get from us is this kind of harmonized view across all the different departments to understand, again, if in whichever entity or whichever department we're doing business with a counterparty, everyone within the company needs to know about this. Everyone needs to be able to give the information that they have collected on that entity, whether through direct interactions or, historical interactions. But it's really making sure that there is this fast communication and that everyone at any given moment, whether it's a supplier, whether it's a customer, whether it's an acquisition target, that everyone knows what is happening and who in the end they're actually doing business with. That's the most interesting part, or the most crucial part. The difficulty at the moment, of course, is, as I said already a couple of times, is that the speed at which we have to take decisions has only gone up to Brad's point, where initially you would get an email or, you would have a direct interaction with your customers, with your suppliers. Now, basically, your AI is talking to my AI, and we are used to that type of language. You used to think you get an email, it's like, well, this is a bit of maybe this person is not in their native language, or they use Google Translate, or it's something fishy. Now we're not even at that point, because AI has become so advanced that they can use that natural language. And your AI is probably talking to another AI, so there is no detection there anymore. So despite using all those, let's say, automation and everything, we still need to try to be a step ahead of, okay, what is it now that we need to, let's say, what are the things that we need to focus on to detect whether or not this is something fraudulent? Yes, Brett, indeed, the AI arms race, 100%.
We came in on this. Your picture of the delivery driver was very pertinent, because this is where we actually came in on this conversation 2 or 3 months ago when we started talking about it. Was because it all came off because a company was identifying fraud through non-existent delivery addresses, and this was a manufacturing company, so it's not a delivery company like we saw in the picture. This is a company making stuff, and but still going to well, delivery addresses that probably exist, but the people there that are picking the stuff up are saying, "Well, thank you very much," and taking it away and then selling it again, right? And of course, not paying the company that manufactured and delivered.
Yeah, and the thing is about fraud is that, and that's also another trend that we see, it's obviously there's a lot of focus at the moment about the reputation of a company. And there is no company that would like to say, hey, you know what, we're going to talk about the same thing I am on my contractor in my basement. That's not something you're particularly proud of, but it happens. And we need to communicate about it. We need to be open about it. And like the network that we have here, this is something that we need to address, and that we can share experiences simply because we will learn from each other. Because again, 10 years ago, you basically got an email that some exotic prince was leaving you an inheritance, and you were like, yeah, that doesn't sound right. But at the moment now, everything is it's so difficult to see the difference between what is right, what is wrong. So I think it's very important to continue to share those experiences, and then also, what have you done to mitigate on that for the future? Again, it's not something that we, like to talk about, but it's something that we need to talk about because we need to learn from each other to make sure that we are, let's say, a bit future-proof.
Are there platforms for that, or is that something we could do through like Callisto's membership? We could have a fraud forum, for example. Well, obviously, there still has to be a degree of confidentiality, but there's something we could discuss on a more regular basis.
I mean, I think it's definitely something like this is indeed great because, or like this platform, again, we can do this on a more like anonymized basis, right? It doesn't need to be, hey, I'm company X and this is what we came across, but hey, I'm indeed, a major company in the billions in manufacturing business. this is what happened, this is what we noticed, this is how we noticed it. Basically, these are the losses that we were facing, and these are the actions that we're taking to mitigate. I understand, of course, from a confidential level, and again, because of that reputational thing as well. But yeah, I think it would be great if at some point we could get some anonymized case studies and to discuss this just as a group, because I think a lot of people could learn from it.
Okay. All right.
I think it's certainly more important in the trade and B2B lines rather than regulated entities, because if you look at banks and financial institutions and insurance companies, roughly about 1 in 8 to 1 in 10 people who work in those industries, as you would know, Eva, are within a compliance function. So the regulated industries are ready for this. They're armed for this. They have not only the technology, but also the skills and the wisdom of people who are fraud specialists. Banks employ whole departments that are into fraud. Within commercial credit, so if you're just setting a B2B line, for example, and you're not a regulated business, even if you're listed, you don't have that sophistication to trade with credit. So what a lot of the bad actors are doing now are moving away from trying to rip off banks and finance companies, and they're trying to rip off people with trade and invoice credit. So this is probably a lot of the people within Callisto Grand's sort of remit, the people here listening to this who don't have that sophistication through no fault of their own. Through no fault of their own. It's just that the engineering of that company, the structures of those companies are get the sales through, get the sales through. I remember talking to a friend of mine who worked in when I was an expert, working in the travel industry, and he was processing, I think, up to billions a year from all over the world. And I was saying, are you going to tell me that you've got no checking in the sort of like in the credit or the fraud or the AML function, and that every penny that goes through your organization is completely clean? So it's something that is probably more to the non-regulated industries where the bad actors, the fraudsters they've got us in their line of sight. They've got us in our crosshairs, in their crosshairs.
Yeah, 100%.
Okay. All right.
All right, awesome. Talking about a case study, probably you've seen this in the newspapers, in the media, etc. But when we look at Stan, for example, so this was basically a London-based non-bank trade finance provider, so fintech. At the peak, they were, I think, roughly in euros, they were valued at about 900 million. And basically, they're providing approximately 800 businesses financing, claiming again that they were faster to provide funding than competitors. So again, there is this element of, get your money quickly. And they were good, right? Because they had investments from Citi, the Barclays, etc. So at some point, there was HSBC Innovation Bank who was providing Stan with roughly 35 million revolving credit facility. This was originally by Silicon Valley Bank, but that they got rescued in March 2023. Essentially, what they uncovered is that Stan was receiving funds and paying invoices basically to sham companies. The payments, and I'll show you an example in the next slides. So they were actually thinking that payments would be done or made by large blue chip companies because the names resembled on the invoice. But looking into it, basically those were shell companies. I have the example here where essentially, if you look on it, you see this company would look like you would be paying to actual Repsol, but then if you look at it, it's a company somewhere in Serbia. And it has nothing to do with the actual Repsol company. But again, given it was a shell company that was mimicking those big companies, people had no idea. On top of that, there was involvement with anti-money laundering, done via, I think it was a company in Singapore. And at the same time, they noticed that given the banks started to ask questions at some point, I think in 2018, 2018, I think their auditor, Ernst & Young, actually resigned, given they noticed, I'm trying to find the right word, given they noticed some, let's say, odd business with the payments. So they began exhibiting a default risk of 12.8% already, following our financial models, which created a bunch of pressure, of course, on senior leadership. And so this is a bit of what we call this interconnected and exponential risk. So on the one hand, you have this involvement of the shell companies. There was money laundering done from Russia, and at the same time, that company fell into distress. So all of a sudden, a company that was valued at 900 million, basically, failed, I think, in 2024, if I'm not mistaken. Sorry, Mark, you had this. Oh, the auditor's responsibility in these examples. Very good question. Already, so as I said, for this one in 2018, EY resigned because of this, because simply they saw that there were anomalies. But I think, I don't know what your opinion is about that in terms of the auditors, because I would say in this case that it's the company itself that needs to look at, who are they sending these invoices out?
Mhm.
An auditor is indeed going to check whether everything was okay with these invoices, but I don't think they will be the ones checking the actual counterpart. I only worked a year in Deloitte audit, so it's a long time ago, but that's what I remember when we were checking on invoices. It was more of this, does everything correspond? But we weren't really going to check on that counterpart. So it's an interesting question, but maybe someone else also from the audience can check in
Yeah,
if you want to say
I
something.
was kind of asking. Yeah, I think it is very much one for everybody but I suppose you kind of touched on it there anyway. The role of the auditor primarily is to see at a fairly high level that a company is going to be a going concern for the next 12 months, right? So without scratching too far under the surface. And taking this Sten example, I would imagine up to a certain point, it probably ticked all the boxes, right? There were invoices, there seemed to be an audit trail in generating them and where they were going, etc. So on the face of it, it probably looked reasonable, right? But
Exactly.
yeah, so
Yeah, it has to be done. It has to look reasonable, just reasonable enough to pass inspection, and it's usually done with a sense of urgency
yeah,
to get it through. By the time the auditors show up, they're looking at your books from 12 months ago. So,
right.
at very best, what they could do is maybe look at the process. But if it's again, getting back, if it's a regulated entity, which these would have been, there would have been some trust to say, well, we got our fraud process through the FCA, through the regulator, so we should be fine. But it looks like someone found a hole in that, even though it was reviewed
I think a
by
lot of it
the
comes back. A lot of it comes back really to what you was. I mean, regular followers of Callisto will know that we sort of we often say that sometimes like the old ways were the best, or the things to prevent things actually are still very simple. You said right at the beginning, Brad. We're in this AI arms race now where machines are talking to machines and so on. I guess what I'm kind of harping on about at this point is that it's not unreasonable to, when you have a big company with an army of salespeople all over the country, that where you have delivery addresses, they actually go and inspect it. It's not unreasonable. If it's a decent sized business, to actually just, I mean, we used to do that before, to go and inspect premises. But that's another kind of dying art, isn't it? To actually see the place where your goods are going.
I guess that's the whole thing again with the speed of decisions and the speed of transactions that we currently see. Like every company constantly needs to grow, and indeed we're chasing more and more revenue. But at the same time, where 5 years ago we were preaching, and we're still preaching that, like, do your decent due diligence before you do business with a company, then we were more talking about, don't sell anything to a company that at some point is not going to be able to pay you, because, you'll just lose in the end. But now there is so much more that we need to uncover. that indeed, back to the basics, it's almost no longer possible unless you have a huge, let's say, army of both sales and credit analysts. But then you're not being competitive anymore in terms of margins. So there is this very delicate balance or trade-off. But yeah, but it's a very interesting dynamic at least. So every year we have something good to talk about.
Something new, something new.
Yeah, exactly,
Okay.
exactly. So as a takeaway for that, it's really, again, unify, break down those silos, make sure that people from your financial crime units, or at least that there is this component of, Mark, I know you like to talk about credit policies, but this should be also part then of, for example, a credit policy, or if you have a different department for that, great. But that you make sure that when you do your checks on those counterparts, that you are indeed checking for those types of frauds. And again, we'll look at it in a minute, how we can do that on a bigger scale. And as we talked about, it's interconnected risk. It's risk across these networks. Don't think that just because you're doing business with company A that your risk ends there. Really try to uncover that bigger picture. This brings us to what we call then those shell companies. A shell company is not necessarily, per definition, fraud, but we know that those are prone for fraud. And again, it's all about making sure that you have signals that can help you prioritize. If you have a portfolio of 20,000 customers, that you know which ones are more likely to be involved in frauds or in any type of, let's say, any type of negative way.
Okay.
Not to make this into a Moody's thing, but this is more what we kind of preach in terms of basically in an ideal scenario, how would this look like when you basically are doing your due diligence on companies? Yes, the foundational bit is, of course, that we would look at the entity information, the corporate structures, Mark, what you said about the parent-child relationship, including the ultimate beneficial owners. It's looking at what we like to call real-time information, close to real-time information, so information which is coming live from the registries, any documents supporting it. And again, in terms of screening, you want to do a detailed review, but then again, we know that if you're responsible for massive portfolios, it becomes difficult. So yes, we can use AI-powered alerts, but still in the end, you are the one that is taking those decisions. It's about, and I know we talked about this 2 years ago as well, it's also about incorporating what we could call the typical compliance checks. So whether there are any sanctions against people, against companies, politically exposed people, looking at any adverse media, because still this is also helping us to detect this fraud. And then, yes, of course, we're Moody. So yes, we have a bunch of risk indicators that can help you with that. But most importantly, that you can integrate all those types of information. Again, I keep repeating myself about it, but breaking down the silos. If this is what your platform could look like, a big component is about the communication, about reporting it, about showing the analysis that you have done, that you can learn from each case. I see there are some things going on in the chat.
Yeah, we're just talking about AML as a standard training for everybody, but particularly everybody working in credit order to cash. I think yes, there was a question I had for you later actually, and we'll come back to that about how this all fits in from credit O to C, right? And whether because I think so yeah, we'll crack on for a bit, and we'll come back to that towards the end as a part of the summary.
Okay, sounds good. I promised several times already that we were going to talk about how you can basically identify this on a bigger portfolio, because again, if we can do this analysis on a case by case, awesome. But I also understand that if you maybe have small exposure to certain companies, that you don't want to do this on a case by case. So essentially, we're looking to develop tools, or we actually have done it. Basically, what are the risk indicators that we need to look at to identify companies that are probably shell companies? Again, it's not because it's a shell company that by definition something is wrong, but we just see that if something is wrong, in most cases, it is a shell company. Let's put it this way. So we're going to look at around 7 components. And basically what we are going to do is use our tools, use AI to basically make sure that we can, the biggest one that we do with this is the prevention of fraud. And basically highlight any, what we could call suspicious corporate behavior. Again, it's suspicious. It's not by definition wrong, but it's suspicious. But the big thing about it is, of course, that we want to reduce the manual work again so that we can actually use this on a portfolio. Let me see. Oh, no. Oh, sorry, I must have removed a slide to put it at a later stage. So in any case, what are we going to look at? The most important thing is looking at those directors. I gave that example in the beginning. Circular ownership. So again, up to Mark's point with the parent-child. So looking at any funny between brackets ownership, any disparities that we see in terms of the jurisdictional risk, mass registrations of companies, and then, and I have a funny example of that one, the outlier age of key individuals, dormancy, so dormant companies, and then if there are any financial anomalies, that is what we are going to look for. I'm going to skip this one because I have 30 slides and we're only at the half with 19 minutes left. But how do we define basically shell company? In most cases, they don't have a physical presence. You recall the little house in Cheyenne, Wyoming. They generate little economic value. And again, it's legitimate, but it's prone to misuse. The FBI is actually concerned about shell companies. I think we'll share the slides, so I'll let you read this at your own pace. And I added a couple of hyperlinks within those slides, so you can read this at your own pace. We have a tool which is called Orbis. We have around 600 million companies in there, and about 100 million companies have at least one indicator. So that indicator, those that I was talking about. There's actually 7 companies in there that have 5 indicators. So there you could kind of safely say that, you know, something is seriously wrong. But again, it's really looking at the connections between, you know, is there an atypical directorship? Do we see some mass registration? So it's really kind of connecting the dots for you. Interestingly enough, you all remember the Panama Papers. So we really saw this massive increase of the last couple of years. Once the Panama Papers leaked, that went down significantly, but still we see over the last couple of years that we are still approximately at the same level, highlighting just the, let's say, popularity of these kinds of companies. Also, a hint is that if we look at the type of companies for shell companies, obviously business services is by far the highest for the simple reason that there are no goods. So it's basically playing with invoices. Again, happy to share the slides if you want to have a quicker or a better look at that. This is a funny one because this is one of those flags that I talked about. So again, when we're looking at those companies, we look at directors and managers. And one of the outliers that we have found is quite old things in terms of age. So there are no less than 4,500 companies that have a director between the age of 0 to 5 years old. That is a red flag. 5 to 10-year-olds as well. Think about Hassan, who's celebrating his 10th birthday today. What is also odd is that we found a significant number of people above the age of 100. And yes, Mark, I see you grinning because you saw my little remark on the ikigai. For people who don't know, Mark, go ahead, explain what ikigai is.
Okay. Yeah, ikigai is something we introduce into our training programs as well. It's actually a Japanese term, which is it translates as your reason for living, basically your reason for being. So and there's much more to it than that. Yeah. So I was really delighted when you incorporated it in this fashion. So yes, companies or people that have been around for a while, they've certainly found their ikigai.
So for people interested in the ikigai, it basically is, I think if I'm not mistaken, it's like a village in Japan where there is a significant number of people above, I think, the age of 100.
Yeah.
And they identified that those people are healthy and living because what we then say they found their ikigai. So basically they are still working, But the work that they're doing is they found work that they like to do, that the
Yeah.
world needs, that makes them money, and what's the fourth one? They're good at.
Yes.
Which
Yeah.
is why I put a little joke that if you're still
Yes.
working above the age of 100, you probably found your ikigai. It's a
Yeah.
good book to read, by the way. It's very inspirational. But you get the point. The oldest known living human is 122 years old, but yet still we have 2,265 people in our database that are registered as a business owner. So these are the things that we can detect on a higher scale. Potentially there is someone's grandparent who is still working, but let's say that we think it's, the reason is probably it's probably quite or yeah, it's probably not real. Let's put it this way. And then this is one of my favorite slides. When we talk about mass registration, so what do we mean? It's again not looking at this one entity specifically, but it's about zooming out and say that on the 500 or the 600 million companies that we have, it's looking about funny patterns. So what we found out is that there is a strip mall in South Africa where there are no less than 61,000 registrations. And for the people who may go to Egypt, there are almost 23,000 companies registered on the specific address of the pyramids of Giza. I see Brad is having a lot of fun with this.
I was going to say
Same,
they must be really old businesses.
I was going to say that these are companies of 4,000 years old or more, right? So
probably. But all jokes aside, like you get the point. There is this little suburban village in Copenhagen, 600 companies and a residential street in Essex, UK, 80 companies on that one specific house. And you also recall the house from the beginning of the presentation. So this might seem fun, but obviously this is not fun if you're doing business with one of those companies. But this is really what we should uncover when we talk about if you have, or potentially, yes, if you have a business registered in the pyramids of Giza and the director is 100 plus years old, and maybe, there is something really funny going on there, but you get the point. These are the things that we need to look for. And this is essentially what we try to uncover with those shell company indicators. Again, it could be legitimate. Imagine that you are an IT consultant living in Essex and somehow your neighbor has 79 companies registered, but you get the point that at least these are the patterns that we need to uncover. And essentially what we then have done is created this one indicator, which is looking at those 7 potential flags and giving you an indication of, for this specific company, we have identified it as a shell company. Please pay attention to it. It could be legitimate, but there is a very high chance that this would get you involved into fraud.
So in practice, Afia, so that this information would come up as a red flag, like you say. So a company's got a new client, they do their checks and balances, they do their searches through Moody's databases, and this comes up. Do you have kind of working stories of what companies actually do next, and maybe they've prevented, there's a good side to this as well. They've actually not entered into contracts because of these kind of flags that are available.
Well, one of the things that we would typically do is basically do a full portfolio analysis. So basically taking them out, we can make the distinction then between, is it just one of those indicators that is highlighted, or are there several? And especially if there are several, then I would say that is the isolated group that we would do a deep dive on. But up to the previous points, for example, what we saw with Zen Technologies, I think especially for that group, it is something where we try to see, are there any other types of risk? Is it, for example, is there a mass registration and the company got just established 2 weeks ago? Yeah, that is kind of almost like you can do business with them, but I would very much go for a cash in advance at that point. So it's more of this, can we make some sort of risk classifications? Maybe for some you will say, well, financials are good. You've done a quick check on, for example, indeed, the physical address. If you all of a sudden see the pyramids, then it's probably a no-go. But at least there you can then build out some policies. Okay, if you have that identified it as a shell company, we do a second check, maybe another check. Then still you could think, well, okay, we are feeling okay to do business with them, maybe with some, additional, whether a guarantee, etc. For others, that it's simply like a no-go. I think here it's important that you work closely together with your compliance department if you have one. If not, I think I saw it somewhere in the chat that indeed, I think it was
Vincenzo, yeah.
Vincenzo, yeah, that said it that anti-money laundering, just basic compliance training should be part of every credit analyst, credit manager, any credit professional, basically, because there is, again, so much risk connected to that. I think first step is uncovering, again, could be legitimate. Do your other checks as well. And then you could ask still if you feel like, okay, we want to move ahead with this. Yeah, I think this is up to Brad's point. This is where you then need to have an actual, let's say, one-to-one conversation and not just go with it based on what you found, what you would find in an email typically or something, because yeah, this requires attention. Let's put it this way.
I think just as a side subject to this, and we're talking a lot about AI and technology to unearth all these trends and so on, like you're showing on this slide here. And when we come back to a subject that a regular subject now, like AI is going to take my work away. I was just thinking there, that here's a great example of people who see credit management just as analyzing balance sheets and coming up with ratios and setting up a credit limit. Yeah, those days are numbered, right? Because that's not what credit management is about now. But yeah, I can see that people who go into credit management, you're going to be 50% an analyst and 50% a detective, because you're going to these kind of flags are going to come up frequently, and then the role of credit management, or going back to what we used to do in its purest sense, credit control, controlling credit, is going to have a lot more investigative work to see how many of these delivery addresses, customers, etc., are actually legit. Right? So there's really interesting work way beyond just looking at balance sheets and analytics.
And I think there, and probably that's already a discussion we had 5 years ago when we were speaking with Paulo from Lego about, how can we partner up with sales? I think there is a big thing on before you invest any type of time from your sales folks on any counterparts. And this is where, as credit people, you can be extremely proactive by saying, well, it doesn't make any sense. Typically, for those companies, they will reach out to you, but still that you can say, well, we are 3 months, well, we're literally now 6 months before a new year is going to start. Maybe somewhere September, October, if these are the companies that you would target for 2026, let us sit together for a day. These are the analysis that we've done for you. Please don't even bother for these. These are gray zone. If you want to do business with them, please make sure someone from our team is involved. And not just, like, for example, the American way is more, we just sell and we put a lot of focus on collection. I think in Europe, and I'm trying to say it in a very sensitive way, we do it in a bit of a more logical way, that we are a lot more on prevention. But I think we can be a lot more proactive even if we would do these types of analysis, because also this way you can almost identify what is for us, like, the golden customer. We've checked it up front. We almost, hey, by the way, as a sign of, go ahead with this, we also already calculated a credit limit for it. But at least we are confident if you invest time in these companies that for the time being, obviously continuous monitoring, but at least that we know that these are okay counterparts to do business with.
And going beyond just the literal preventing of fraud in itself, if we think back to what happened in the UK just a couple of months ago with Marks and Spencer's, Co-op, and Harrods, that's pretty devastating in its own right. But the reputational capital, and I remember in the previous session we talked about that with an airline, didn't we, and data security and so on, which is very much connected, I feel, to this subject. I mean, the reputational damage is just, well, it goes on. It's that's probably the end of a business, really, isn't it, when you go down that road? Yeah.
Well, and I just see that we have 5 minutes left, so I
Yeah.
think that's a good point. I'm sorry, the 9 other slides will have to wait for another time, but
Next time.
it's not just about the reputational and the money that you're losing. Actually, I think in 2023, there was this failure to prevent act in the UK. So it's not just about, hey, we were involved in fraud, we lost a lot of money. You actually can get a massive fine in the UK if you were involved in fraud and you didn't do a reasonable, let's say, due diligence to basically prevent it. It's probably what you also see when you are victim of fraud yourself. So, for example, if you've clicked on a funny link in a text message, someone guides you to what you think is your banking portal, you basically do an authorized payment to someone else's bank account. Then the bank can say, we're not willing to reimburse you for this because you didn't do a proper due diligence and so on and so on. You should have known that this was fraudulent. It's the same thing what they're now imposing on businesses, simply because what we've seen in one of the first slides is that 41% of all crimes in the UK, there is this component of fraud involved. So they're now really pushing companies, up to Brad's point, if you regulate it, that's another story, but they're now pushing companies to make sure that you are doing a proper due diligence, that you have, up to Vincenzo's point, for example, that people have been trained and everyone within the company has been trained, right? Not just because you work in a compliance department, because this is, again, an overall responsibility. And I think as a final point, yes, we all work in credit, but still we are all there to make sure that our company is not exposed to any type of risk. And again, this is not just about us losing money, but it is also losing money because of fines that you could have avoided if you would have done a proper due diligence. And that's my final words, because I know you needed 3 minutes at the end.
Well, roughly, but no, absolutely fantastic again, Aphid. I know we could go on probably for another hour with lots more because it's such a huge subject. And thank you, really, thank you very much indeed for doing this. And we always say the definition of a good presentation is the number of people at the beginning. There's the same number of people at the end as at the beginning, and that's actually the case. Nobody has left at all today, so that's a big tribute to you. So yeah, great subject. If anybody does want to continue this, please get in touch with ourselves or AFIA directly. We will be talking about this at the Credit Matters Conference, which we mentioned at the beginning, Budapest, October 9th and 9 and 10. Please come and join us. AFIA and the Moody's team will be there. So yeah, that's kind of it really. Callisto, we are back next week with another session, another online session on the 16th. And we, Afia, Esther, and myself, when we finish this, we're going to rush off from here, throw some clothes together, and we're all going to meet in Madrid later on this afternoon. So we're doing a workshop in Madrid tomorrow, which we're really very excited about. So, everybody, thank you again for joining us. It's been a great session. Stay in touch. Take care. Yeah, all the very best. God bless, and we'll see you all soon. And Afia, thank you again. Really, it's been fantastic. Thank you. See you later on.
Perfect. Thank you all. Have a nice
Cheers,
day.
everybody. Bye bye.
Bye.
Thank
Safe
you.
travels.
Bye bye.
Thank you.